Hello viewers, welcome back. Today we are going to look into the stop loss strategy. Um, I hope everyone likes the video, and I hope uh, you guys to leave a comment if something you didn't like in this video come up. And let me know your thoughts and comments in the uh, session, and subscribe to my channel if you can. So what is stop loss? Stop loss is a trading strategy when the trade is going against our direction. So um, you buy a call option and uh, you buy the stock at $50 and you sell it for a higher price, but the stock begins to decline and continue falling. Now you want to cut your losses to a $5 loss and sell it at $45 so that we are not losing a chunk of our uh, account balance. So cut loss your losses. That's what the stop loss means. Um, there are so many strategies in there. Like many traders think like we will cut loss the strategy like between 5 and 40 percentage of the losses. So if the stock, I will just put my stop loss at 5% loss on every trade, but you will do like 10, 15 trades a day. Okay, so that time 5% is a good thing, right? And the 5%, you keep it as 5% when the stock moves only very little a day. Like the average traded value of the stock is like $2 or $3. So then you keep it the stop loss at 5%. But if the stock can move like 10, 15, $20 a day, then you have to keep it like a higher stop loss because you don't want the stock to go back in your direction after hitting the stop loss percentage. So that's the reason why I kept like um, or 40. So you can see how good the stock moves in a day. Then this is a trailing stop loss. So with an example, I'll tell you like when you buy a stock at 50 and you start stop loss is set as 45. Now when the price rises to 60, you will update your stop loss from 45 to 55. So even if you are in loss, you will still be in a gain. You're getting it right. So when the stock goes up, we increase our stop loss from to a better amount, better pricing. Um, then this is a support and resistance stop loss, like some of the experienced traders put it. Like we'll see uh, the the value of the stock that goes up and down at a particular level in the previous weeks or the previous days, and we exit the trade accordingly. I have kept a small diagram. So what happens is you see this resistance levels, right? So um, the stock came back. So if you are going to enter a trade here, we will exit it at for a call option. We are expecting the stock to go up, but we will definitely exit it at this point, or we will add more stocks at this point when the trade is coming our way. But you can only add if you really play with a strategy like you trade at a certain percentage of your account, then you can average it. Like if you know, you should be good at averaging. Sometimes things may not go in your favor. Even if you average it, it will still come down. So at that time you should be able to mitigate. Then time-based stop loss, like there are IV and delta uh, values which gets changed, right? So higher IV and higher delta means the price of the stock options will, will not come to the same price even the stock comes. Like I have explained the higher IVR earlier in this in a different video. So basically, you just wait till for 1 or 2 hours and then cut the loss and then come out of it. So rather than waiting the entire day. Most of the times when you enter a trade in the morning, the price might not have much IV or delta problems in the morning, but in the afternoon when the the market is about to close and you have an expiration date this week or tomorrow, then this IV and high delta will come into picture. So that time you need to exit the trade before noon rather than waiting to, this only applies to do when you do a stock trading which has an expiration date today, tomorrow, or day after tomorrow, or a high volatile or high event is going to happen. Uh, then mental stop loss, it's no concept when you like you can predict what where is your husband or wife at this time of the day, right? Because you are living with them. Same way when you trade one stock, you know where the stock is going to be and what is going to happen. Something which don't have any like any technical or anything, just go by your guts. Okay, I know it's going to not work in my favor, so I'm just cutting my loss and come out of it without looking into any other thing. Um, um, then there is another strategy is RSI level. We look for the RSI level values like to exit the trade. We'll wait till the RSI to hit because RSIs normally will show the reversals. So that's why we use it for some trades. Above 80 or below 30 is good for reversing the trades if you are working on options trading. Then is EMA crossovers like XEMA and 2x EMA. When this crosses over against our trade, we just exit it. We don't wait till then, you know. Or check the option Greeks like delta, theta, those kind of things to see we can, whether we should continue in the loss trade. Then the prices touches 100 EMA, yeah, like, against our trade. We are in call option and the price comes and crosses below the 100 EMA. That means the price is not in our favor and it's time to get out of the trade and move on to the new trade. Stock market always gives high risk and high reward, correct? There are trades you can make like $400, $500, but if you don't exit it at a loss of $100, whatever profit you made in that day, or you will be nullifying it. So always stick with a percentage based if you are doing a long, uh, you're doing more trades and you're doing it in a long run. But if you are like taking only limited trades, then you can risk a little more. Um, that's the concept of stop loss. And there are some other conditions some traders will look like uh, if the stock price is above or below the 15 minute of after the opening. It does not have much technical thing, but some traders will use this as a concept to exit a trade. Another thing is check the volume of the puts and calls. Like when you buy, what is the majority of the crowd is holding. like whether they are with you or they are against your trades. So that way you can see uh, where to put your stop loss. And check for flash news for any relevant update, like if the owner of the company dies and the stock will go in downwards and you have a call option there. So there's nothing you can do. The price of the stock will come down because it has a bad news. So you should have all these resources available next to you with a um, mouse click, so that you are not getting into, you're not wasting time to find a flash news, or you have to keep everything ready and available to to get take a decision. So that's what I do it. um, I hope you like content of my video, and I really appreciate if you can leave your thoughts or comments. If I missed any points, please educate me by writing a comment. Please do. It takes a lot of time to make this kind of videos, but I really appreciate a time and effort, and I really thanking you for watching the video. You guys have a good one. Thank you.